Is this gonna be YouTube, ate, no?
Yeah, I think I've just decided to put in YouTube so we can make like a folder. It's I don't know. Facebook is still a bit tricky for me when filing up all my stuff. Yeah.
Yes.
Anyway, have a good afternoon. No, night na pala dito. Here in New
Night.
Zealand. It's 7:05 right now, and as what we have promised, we're here. We're back again for our first home buyers guide and insights, and we're now episode 5. This is Juvie of Grow Yourself, and we have Marianne.
Um, wait, like, okay, so are we, yes, we've already introduced, ano ba yun, lumulutang yung utak ko. Anyway, ate, if you will notice, I have a background of the, the day, the day in here. So of course, I am from AT Realty, Ray White, Manukau, where we have 4 different offices: Mangere Bridge, Manurewa, and Manukau. And we're gonna have another big day of auction. So that's gonna be over 50 properties going for sale in one day, over 100 of registered buyers.
Wow, when will that be?
So that is going to be on the 31st of January. So if you want to list your property right now, contact me right now. I can give you an appraisal. So sa mga nanonood sa atin ngayon, ate, if you own a property, so I know that we are talking about first home buyers, but if some of our owners or like viewers own a property,
Yeah.
if you want to have a free market appraisal, you're thinking about selling, this is a really good day to sell. It's going to be over 50 properties in one day. We've had 2 of the day. So we had July 25th before. We always beat against the odds at the AT Realty. Will have all these big day auctions on the quietest months of real estate, and we always do really, really well. So July was our first, and then our 2.0 was the 10-10, which is days before the election. And we've got a really, really successful sales. Um, Sales value as well, and then sales property that we've sold. And then now we're gonna have it again on the 31st of January. We will be going live, going hard, more exposures for the vendors.
That's next year, 2024. 31st? Correct me if I'm wrong. 30,
31st January will be the
wow,
auction.
8 months.
And then we will have a longer, bigger exposure for the properties that's going to auction on the 31st. Because what's gonna happen is that we're gonna launch it on the 26th of December, which was Boxing Day. Last year, AT Realty, Ray White done the same thing, and it was hugely successful. I know that because I was from a competition, and I'm like, oh my gosh, they're doing so.
Wow, I feel like goosebumps. 50 properties in one day.
Yes,
All
so we
right.
sold our very first one at the actually we sold, I think, over 46 million worth of properties in one day.
Wow, that's really a lot.
Yes. Oh, Sanjeev is
Anyway, I know we have a special guest. Oh, kind of quick wrap up because this is already our 5th episode, and
yes.
last week we had Jai of the Journal of Jai who shared with
Yes.
us their journey in buying and selling their house and buying another one. So that was really a good idea. But today we have another guest, and I would like Marianne to introduce our guest tonight with us.
Yes, everyone. I would be very, very honored. Me and Ate Juvie are actually honored to introduce this very special guest for tonight. Sanjeev Jangra is one of the top advisors here in New Zealand, mortgage advisor. And every time I have questions when it comes to like not just only for my clients, but also for me, I always just one text away, Sanjeev will answer. So Sanjeev Jangra, let's all welcome Sanjeev.
Thank you
Yay!
very
Thank
much.
you so much.
Cool.
Yes.
Thank you so
Okay.
much.
So
Sanjeev.
Sanjeev,
Yes,
can you hear us? Can you hear us? Like, okay. Yeah.
I can. But can you hear me?
Yeah.
Yes.
Awesome. Sorry, I just locked the door. Yeah.
Okay, so what we're gonna talk about, Sanjeev, is that me and Ate Juvie, we've been having all these the episodes helping out first home buyers to get an insight of like they have plans of purchasing their home but they don't really know what to do, and it's almost the same as what we did before, when I had a video with you as well. So Ate Juvie, would you want to start with a question, maybe just a question to answer, like Sanjeev can answer, and then we can listen and then we'll go from there as well.
Right. I think as a first home buyer, let's say for example, because we're not, technically I'm not a first home buyer, but we're planning, thinking of selling my house, and then
Yep.
that will make us a first home buyer again. Am I right?
No.
Not anymore. Oh dear.
You
So
know
what would you classify us as if I am going to sell our house and then we're gonna buy a new one? What would I be classified as?
There will be another in owner occupied property, but like you're not a first home buyer, right? So the difference is like, let's say you've never owned a property, like this is the first time you're buying. So this is the opportunity that when you can actually use your Kiwi Saver, you might be eligible for government grants and stuff. You might fall into a special criteria where the bank might lend you up to 95%. But if you owned a house and then you ended up selling it and now you want to buy another owner occupied property, then the criteria is different. So you're no longer eligible for Kiwi Saver, right?
What
Uh,
a shame.
yeah, you can't use your KiwiSaver. The only time you can use KiwiSaver is, let's say you bought your first property for, I don't know, $600,000, right? And then you ended up selling that property for $600,000, and then you didn't make any profit out of it. And your overall financial situation is still the same or worse, then the government will allow you to use KiwiSaver.
Oh, thank you so much for clarifying that because I really thought we'll still be classified as first home buyers after selling it. Hmm. Lucky we've
No, so
found
you can.
it.
The banks may like they can still lend you up to 90%. However, you're not a first home buyer. It's just like owner occupied
Mm,
property as long as you don't own any other property.
no, that's okay. That wasn't supposed to be my question though, but it's like such a sudden twist. Anyway, for a first home buyer, run us through why do we need to hire or look for a mortgage broker? What's the need for it?
Um, it's like if when you go out to shop for a car, you don't just go into a Mercedes showroom. You want to go to like a car dealership, right? So where they can show you all sorts of options rather than just one brand. So the difference between us and the bank is the when you walk into the bank, number one thing, uh, it's so hard to get an appointment first of all, and then like if you have any questions etc., you have to wait for them to give you a call, or you have to wait for like another appointment like in a week's time. And let's say you walk into, I don't know, blue bank, right? I'm not going to name any bank. So let's say you walk into one of those blue banks, and then the problem is they will only show you what they know, right? So they're not going to tell you what yellow can do for you or green can do for you. So they're only going to show you what their policy allows. So I'm an ex-banker myself, so I've seen the deals where I like it makes sense to approve those deals, but then that particular bank's criteria wouldn't allow me to approve it. So that's where you should talk to a mortgage broker who can actually explore multiple options for you. For example, we have 20 lenders on our book. So if one doesn't do it, maybe second, third, or fourth might do it because every bank has got a different criteria. So rather than
Yeah.
you going to every single bank one by one, I will do all of that in one go.
Yeah.
Cool. And second thing is like when you talk to the bank, they will not give you any financial advice because they're not allowed to or they're not qualified to do it. I mean, some of them might be, but most of the time they will not give you any financial advice. So let's say you took a $800,000 mortgage today, and then you ask your banker, "Hey, what should I do with this? Like, how long should I fix and all that?" They will most probably tell you to go on their website and pick up whatever rate you want, and then they will do it because they're not going to give you any financial advice, whereas I will. So I will sit down with you, and then we'll probably just break it down to the point where okay, it will suit you in the coming years. So, or do you want to buy, say, investment property in the next couple of years, or your whole focus is to pay off this mortgage? How do we do it? Sort of thing. So we tailor it. to your needs instead of just
Mm.
telling you to go on the website.
Yes. Oh, okay.
Yes.
So at the Juvie, so like I know that last week we kind of touched a topic about Kiwi Saver, right? So um let's give Sanjeev a scenario, so that at least, like, I know that I've brought some clients to Sanjeev, which is almost particularly the same situation with our kababayans as well, and some others that they're not Filipinos, but then they kind of like met Sanjeev, and Sanjeev was so good to actually explain this over. So one situation circumstance that we've kind of thought about earlier at the Juvie is that, Sanjeev, what if, say, this is a scenario, me and Ate Juvie are
Mhm.
sisters.
Yep.
Okay, so we moved here in New Zealand. We got our residency. We have a bit of savings, um, and then we. So Ate Juvie already have a Kiwi Saver for, say, 3 years, and me, I only just started with my Kiwi Saver.
Uh-huh.
But then, so our my situation is like maybe 60,000 per year. At the Juvie is
Mhm.
80,000 per year.
Yep.
How high are the chances that me and at the Juvie can get a pre-approval on that kind of scenario, like situation, and we want to buy our first home?
Sure. So that will, number one thing, it will depend on what sort of criteria you guys fit in. So let's say I assume like, or let's say you don't have any partner, right? And then you have been in your current jobs for at least a year, or you have
Mm.
been working in the same field for more than 2 years, then you
Mm.
might be qualifying for a product called Kayanga or a first home loan. So that's when, like, if your combined income is less than $150,000 in the last 12 months, you might be eligible to buy your home for, like, you can borrow up to 95% from the bank. So you buy
Mm.
an $800,000 of property, you only need to come up with $40,000 of deposit. So that 40,000 could be combination of Kiwi Saver, the first home grant, your savings, a gift from family member, or things like that. So if you come up with the 5%, you might be eligible to go for that. Second
Mm-hmm.
option you have is, if you don't fit in that, you need to come up with a minimum 10% deposit, and
Mm.
then both of you can buy a house. So with that income, if you're both working full time, the chances are you can easily afford like 750, $800,000 of a house. You got to come up
Yeah.
with 70 to $80,000 deposit though.
Yeah, because at the Juvie, you've asked about that last week about the 5% deposit, right? Of
Mm.
some new
Kind,
builds or something.
I think it's just the Kainga Ora that offers that one. Is it Kainga Ora?
Yes, so with the Kayanga or the criteria for that particular product is like you have to be in the same job for at least a year, or you should be working in the same field for at least 2 years if you have just recently changed your job. Your combined income for the household needs to be less than $150,000 in the
Yes.
last 12 months. So on that, how it works is, so let's say you just recently got a pay rise, right? So both of you are now, like, I don't know, like one of you got a new salary of $100,000, the other one has $70,000. So let's say your current income is 170, but IRD, so the Kayanga will only look at the past 12 months. Okay, so if your past 12 months was less than 150, so regardless of what your current income is, you are eligible for that product. Okay, but when so there are two steps of this application. One is you need to meet Kayangaura's policy, which is 150 threshold. The second one is you also need to meet banks lending criteria. So when the bank gives you a loan, they will use your current income or your projected income. So they will work on $170,000, but Kayangara will look at the past 12 months income, which is 150. So you will fit in that if that's the case. And then second thing with that one is, obviously you need a job stability, and what else you need for that? Yeah, the income needs to be less than that, and then you shouldn't have any short-term debts. So if you have any personal loans, credit cards, and stuff, all together they need to be less than $10,000. So don't just like come to a mortgage broker or a bank and saying like, oh yeah, I want to buy this $800,000 of a house. I've got $40,000 deposit, but I've got $50,000 worth of car loan. So that's not going to happen.
Yeah, that makes sense. Don't
Yeah,
waste other people's time if you're not financially ready. Fair enough. Now,
absolutely.
talking about the Kiwi Saver, just want to make it clear that you can
Mhm.
only use it if you have been depositing for at least 3 years. Is that right?
Yes, you have to be contributing for at least 3 years. And it needs to be like continuously, contributing sort of thing. So, if, for example, you've been in KiwiSaver for 10 years, but you haven't contributed for last 2 years, then it gets a little bit tricky. Um, Technically, you're not eligible, but then if you call them, sometime the KiwiSaver team will let you do it. So what they say is like, okay, you short by say $1,000. If you deposit another $1,000 in this account, then you become eligible, right? Because you haven't
Wait.
contributed.
Yeah, fair enough. So with the money in the Kiwi Saver, how much can you take out? Can you take out everything or you have to leave
No,
some?
you need to leave $1,000 behind. So if you have $20,000 in there, you can only use 19. Okay. And then
Okay.
on top of that, if you're a first home buyer and your combined income is less than 150, you may also be eligible for home start grant from the government. So they will let you, they will give you $1,000 for each year of your contribution if you're buying an existing home, or $2,000 for each year of your contribution for a new build property. Right. So let's say you're a couple, both contributing to KiwiSaver for last 5 years, and your income is less than 150. If you buy an existing home, they will give you up to $10,000, or if it's a new build, you get up to $20,000 free money from the government. So that's your deposit.
Wow. So that money is for each or for both of you?
So you get up to $10,000 for a new build for each person, or you get up to $5,000 for an existing home for each person. So combined can go up to between $10,000 to $20,000. So if you have, I don't know, like I've done a heaps of loans where people have somewhere around like $30,000 sitting in their accounts in KiwiSaver, and then they're also eligible for up to $20,000. So that's $50,000 worth of deposit, and you can possibly buy up to $1 million worth of property with that.
That's a big amount. And that's really good if you will deal with a mortgage broker because they can walk you through and advise you all of these things. Say,
Yes.
a shame we didn't avail those.
Yeah, and especially with this product, not every bank does it. So there's only like 4 or 5 banks who will do it. Westpac, Kiwi Bank, SBS, Cooperative. So these are the banks who would do this loan, and we deal with all of them.
Mhm. That's good. Is Sorry, I got so many questions. Marianne,
Okay.
go ahead if you have one. Oh, we can't hear you, Marianne. Have you turned off your microphone? Okay, well, she'll just fixing her microphone. I have another question here. Oops, I
So
forgot that about that one. Um, are there any lenders that also offer 5% aside from the Kainga Ora?
not at this stage. They will need a minimum 10% deposit. I mean, back in the days, they used to do up to 95% lending. So I mean, time to time, they can change the rules. When the banks know the property market only going to go up from here, then they will probably reintroduce it. But other than that, they want to keep at least a little bit of a buffer. So the normal criteria is you need to come up with a minimum 20% deposit, but then because you are first home buyer, they will allow you to borrow up to 90%. And then when you're borrowing more than 80% from the bank, they charge you slightly higher interest rate. So they call it low equity margin. So basically, because the bank is taking the risk,
Yeah.
lending up to 90%, if the market shifts, if the market drops, then bank gets in trouble as well. So that's how they charge you slightly higher rate. So if I give you an example, let's say you go to, I don't know, ANZ or ASB today, right? So ASB, whatever their special advertised rates are, they'll add up to 0.75% margin on top of their normal interest rates.
Mm.
So you're paying 0.75% higher when you're borrowing 90%. Whereas if you fit in the Kayanga or a product, you don't pay that extra 0.75%. You will get the same interest rate that the bank is offering to someone with a 20% deposit, right? So you save,
Mm.
so your mortgage repayments is cheaper, but the catch there is whatever you're borrowing, you have to pay 0.5% of that as a one-off insurance to Kayangaura. Okay, so let's say you're borrowing, if you're borrowing say $700,000 from the bank, uh, then you have to pay $3,500 as a one-off fees. So the reason behind that fees is Kayangaura will then become your guarantor to the bank. Okay, so
Mm.
if you get in trouble, the Kayangaura will look after. However, they will charge you that fee upfront for insurance cost. Okay, but then you save on the other end because you're not paying the margin. So win-win.
Yeah,
Still the same.
that's
Yeah, yeah.
Another question, Sanjeev. So of course, like I know that we've been sending like when we meet people and they're thinking of selling, buying, and then we send you, what would be the easiest way for them to actually be ready and sit down with you and wouldn't actually, you wouldn't waste time. What are the requirements that you're gonna ask them so that to start the process?
Yeah, but that's like, I mean, again, like I've got a year's worth of experience, so it doesn't take me that long to figure out what we can do for people. So it takes like a quick 5 minutes phone call to
Yeah.
understand. Yeah, so I would expect to, I don't know, like let's say you call me today as a first home buyer. So I'm going to ask you some quick questions. Like number one will be like, okay, what's your deposit?
Mm-hmm.
What's your income? What's
Mm-hmm.
your debts? Right. So do you have any
Mm-hmm.
dependents and stuff? So one thing I
Mm-hmm.
want the first home buyers to be careful of is, so let's say I'm the bank, right? So you're coming to me for a mortgage. You want to borrow say $700,000 today. The
Mm-hmm.
chances are your mortgage repayment will be somewhere around like $1,100 ish
Mm-hmm.
a week. But at the moment, if you're paying only $600 a week rent and you're not
Mm-hmm.
saving anything, my question to you will be like, where are you going to get extra $600-700 a week? Because it's not just the mortgage repayments; you'll also be paying rates, insurances, maintenance, and everything. So the chances are your expenses will go almost double. Now you got to prove to me that hey, you are in a position to afford extra, right?
Yeah.
So that's when the bank will go through your bank statements for the last, say, 3 months or so. If you are spending money on, say, discretionary things like because you don't have any other responsibilities at the moment,
Mm.
obviously you're spending money on like, going out in clubs and stuff. So that's fine. We can somehow do something with it. But then at the same time, I can clearly see you going to, I don't know, casino every day, or you or you have other bits and pieces, or you're doing a lot of donations, right? So how would you
Yeah.
change your habits? Like how would you cover the extra cost? Because everyone wants to buy $1 million house, but are you in a position to afford the loan repayments? Is the main question,
That's
right? You're
true.
willing to sacrifice your lifestyle.
That's so true. Yeah, and that's the thing. For me, Ate Juvie and everyone that's watching, I can attest to that. Every time I make someone meet Sanjeev, that's when they realize, I'm like, oh shucks, like we actually have to tidy up our activities and
Uh,
expenses.
That's right.
uh,
So at least
Absolutely.
3 months, say. At least
At
three
least
months.
3 months.
Yeah, so the bank they go through your bank statements for at least 3 months, but it's not just the 3 month history. So every time you apply for a mortgage, the bank will be doing a credit check on you. So you can't really hide anything, right? So even if you're not disclosing, they will know. So they
Mm.
will know what you've been doing for the last 2 3 years. So if, for example, you're missing your phone bill every month, or you're missing your electricity bill, or whatever, they will
Overdraft.
know. Yeah, so they'll know.
Overdrafts, right?
Yeah,
That's a big thing for them, the overdraft.
absolutely. You're going into unarranged overdraft every month. What's the
Yeah.
reason behind it, right? So there's nothing left in your account after paying all your bills. Like, what's the guarantee like you will be in a position to afford the mortgage, right? So at the moment, you don't have any liabilities, but you're still
Yeah.
struggling.
That's true. And I have another question, Sanjeev. Sorry, like it's getting longer, but then I think we have to
No?
invite Sanjeev again over. But
Yeah, you carry
I
on.
have another question. So you know how the scenario earlier, Sanjeev, that I said, like we're both sisters. I heard about something about how banks compute the serviceability of a mortgage. Is that, like, let's say if me and Ate Juvie, our sisters, were buying together, will they
Mhm.
actually compute it individually or as together that we're gonna pay it? Like the serviceability.
It depends which lender you go to. Most lenders will put you under like a one household. So if you're living together and then you don't have any intentions to like stay like live separately, then most probably they will like put all your expenses and income in one bucket and then give you a higher lending as compared to some of the lenders where they will be looking at your expenses separately. Yeah, so every lender's got a different policy. Like for example, we got Kiwi Bank who can do a shared equity, or like like two of the friends can come together and then buy the house, right? So when they look at the picture, they look at half the liabilities. So if you're borrowing 500,000, would each person be able to afford 250 lending? So that's how they look at your deal, whereas other lenders will look at it in a different way.
I have a guest, Charlie Brothers,
Hi,
in the
Charlie.
house.
Is that
In the house, in the house.
them? Oh,
Hey, bro.
hello. I know I've met
Bonjour,
Charlie.
bonjour,
Mr.
bonjour, everybody.
Medical.
I was promoting the day. Look at that, the day. But we were just talking about with Sanjeev, and this is Charlie Brothers, man, guys. So we were talking about how homeowners, first home buyers, the computation between if it's better applying it in one household or a separate household. So it's a good one, right?
Very
Yeah,
impressive.
so exactly. I mean, because like people think the houses are unaffordable, but then again, like if
Mm,
two or three family members come together, you can easily afford the house. It's
mm.
not a rocket science.
Yeah, that's true.
Could I say something?
Sure.
Okay.
You know, there's a song that goes something like this. If I could turn back time. So if you were in New Zealand in 2014 and 2012, or maybe even 2016, if you could just say to yourself, I would have been 10 years younger and I would have
Yeah.
bought a house back then, the market is very much affordable.
Yeah.
Yeah.
Today,
Hey,
the market, the indications are after 2015, 2017, and especially 2021, the indications are that the market could risk going up again. And the main
Mm,
reason I think Sanchi will support me on this, the population in New Zealand has become so popular that everybody wants to come and live here.
mm.
If the war keeps going the way it is, there will be more Filipinos.
Yeah. Or Indians.
I don't say that in a cheeky way. I love Filipinos. Some of my very best clients are Filipinos. Will keep coming to this country, but so will the Europeans.
Yeah.
And I think that's the biggest risk that we face. That if you look at our roads, we're too overcrowded now with the roads. If you look at our ratio of new builds to accommodate the migration,
Mm,
I think if the government don't be careful, I think we're going to go back into the loophole of not enough properties being built to service what was already short anyway.
mm.
So I think that's
Yep.
going to be the biggest risk. So if you're a home buyer now and you're contemplating, I want to wait, I'm not in a hurry, that's okay. Just think like this. Today I'm 55. In 5 years' time, I'm going to be 60. At 60 years old or even at 55 years, Sanchi will tell you the bank does not want to give money to people
Yeah.
like us.
No,
So
absolutely. And especially
encourage
when you have low
people.
deposits,
Yeah,
there's no way they're going to lend you 30 years mortgage.
that's right.
Yeah.
Unless you marry a young girl, or or if you're or if you're a young man and you want to
young
marry
Filipina,
a widow who's taken who's accommodated all this equity, but those sort of things now doesn't happen anymore. I think let's just change the way we think. I think New Zealand's a great country. Let's all agree with that. And I think the people here are wanting to come and live here because it's safer. But The problem we have is the housing shortage has got to keep going. So just remember Charlie's song, okay?
Yeah.
Like back time.
Anyway, guys, it's
Hey,
so nice to meet with you guys.
thank you.
Enjoy. This is a fantastic program where you guys are running, and I commend all of you guys. And
Oh, you missed out Jai last week.
oh, really?
We
My
had
best
Jai.
buddy.
Yeah, we have Jai last week.
Those of you who don't know, I helped Jai get into property in Cleaning Park. So when I first met them, they were like just like every other person.
Yeah.
I don't want to buy in the area, and my suggestion to her was, I hope she won't mind me sharing this. Just get into the market. She bought a property for $595,000 in October 2018, I think 18.
Oh, 2018.
And in
sold it.
2019, October 2019, we sold the same house for $860,000.
Yeah.
That's what I mean about the people who take action.
Yeah.
And you know the beauty about that property, she only aged by 1 year.
Yes.
Yeah.
Oh, she said about that. We
Does
talked
she?
about it
Yeah.
last week.
Yeah.
Yeah.
You
Disclose
should be
everything.
watching it, like, man.
I do want to watch a show. I want to be the #1 fan. Okay, so sign me up, and you have my time.
Yeah, we'll
Anyway, guys.
invite you next time. Oh, we have a question here from my friend Elena. She's a teacher as well, a Filipino teacher. She's
Yeah.
asking, this question is not for the first home buyer. It's for buying another house using the current house as equity, or selling the current house to get a new property. What's the difference?
Yeah, so basically, when you own a property, the bank can lend you up to 80% of that value of that house. So if you live in it, so let's say you bought a house for, I don't know, $600,000 back in the days, your mortgage was $500,000. And now, say fast forward, your property is worth $1 million and your mortgage is only $400,000. Okay, so if you're living in the house, the bank can lend you up to 80% of that value, right? So if your house is worth $1 million, they can lend you up to $800,000 minus your existing mortgage of 400. You have $400,000 worth of equity that you can use as a deposit, right? So to buy an existing investment property, you will need a minimum of 35% deposit. So let's say your income, let's say income is not a problem. If that's not a problem, with that $400,000 of equity, you can possibly buy a house worth maybe around $1.1 million.
Yeah.
Right. So you can borrow 100% from the bank. So that's when people say, how can you buy an investment property without putting any deposit? So you're borrowing 100% because you're putting your own house on the line.
Wow, no need of deposit, but you will just have another mortgage loan on top of the first one, eh?
Correct. Yeah. So it will be like cross collateralized. So the bank will take both securities. So you're borrowing 100%. So if I look at like our client's portfolio, so let's say you ended up buying an investment property for $1 million today, right? If that property goes up by 5% every year, so your property's value keeps going up by $50,000 a year. So probably 10 or 15 years down the line, that $1 million property is worth $2 million, right? So you can actually sell that property and walk away with $1 million in cash.
Yeah, that's good. You just need to be wise with your money, eh?
Absolutely, if you can.
Lovely. All right, Marianne, do you have any other question?
Yeah, he wants to say something.
Hey, this is in support of to what Sanchi was saying. So also on the flip side, I've ran this with Sanchi many times, and he understands what I'm talking about. If you are an investor or a client that you're looking at thinking like, shall I sell and buy something else, or like what's my decision going to be? My suggestion to you is this: if you have a property that is in a great location and the property is ideal with massive or huge future benefits, like it's subdividable, it's next to the school, it's next to the train stations, mainly the train stations. Okay, people get mixed up. The growth is not by the mall. The growth is by the main public transport is where the biggest growth comes from. So if you have that type of property, please go back to San Shiv and re-look at your numbers properly, because you don't really want to sell that property. Yeah, you sell that property in 1 year's time, you're going to come back and go, oh my God. You know what I mean? So don't do that. So if you're in that situation, get a hold of Marianne, and we're more than happy to help you and advise you, because we get people sometimes who says, I really wanted to go and buy an investment property, but the house that you actually sold was actually the better investment for you to try and hold it. So sometimes you're better to go and sell the car and just catch the bus.
Yeah,
That's a better option.
that's true.
Just for
Yeah.
short term, am I right, Sanjeev? Short term, and then essentially you can reevaluate the situation and refinance yourself back.
Yeah.
That's what you should do. So some people make wrong decisions by selling the best thing that's in
They
their
already
hand.
have. Yeah.
All right.
Absolutely.
Oh,
Good point.
thank you, Mr. CB.
All right.
Charlie Brothers
I
in the
gotta go.
house.
Bye.
Great. See you.
Thanks, buddy.
That's brilliant.
Okay, so you
Awesome.
missed your house with me and Charlie.
Mm, well, there's more of us
Okay.
here tonight. That was really fantastic. And it's like I've widened my ideas as well.
Yeah.
Not just hearing, I'm also gaining insights. Thank you
Yeah.
so much, especially
Thank
to San.
you.
Good. Thank you.
Yes, thank you, Sanjay, for giving us your time, your precious, precious time. But
All
we
good.
learned so much tonight, Ate. And I think that's the reason why we've been always talking about it, Ate, right? Like we have to have this kind of guests like Sanjay, who is really expert. And then at the end of the day, we can talk about situations. We can talk about anything in our podcast. But then we needed a financial advisor that can actually give us that solid answer.
That's true. Sanjeev, will you be happy for us to leave on the comment section your details so that they can reach out to you straight away in case they need your help? Or
Yeah.
what? Any last words to our viewers?
No, but I mean, that would be good if you can leave the details there. So if anyone needs help, please feel free to reach out. We don't charge you any fees because 99% of the time, the deal we're going to do for you is like paid by the banks. And we also compete on the interest rates and stuff because we deal with all the banks, etc. So yeah, if you need any help with your finances, whether it's a first home investment property refinance, feel free to reach out.
Yeah, thank
Thank
you so much.
Oh, good.
And
Thank you
have
very
a
much.
good
you
night,
so
Sanjeev.
much.
Thank you,
See
guys.
ya.
See you later. Cheers. Bye bye.
Thanks, Sanjeev. Talk again later. Bye.
Oh, that was really a good clarification from Sanjeev, telling everyone that there's no
Mm,
charge in reaching out to mortgage broker because other people might be thinking, I don't know how
yeah.
much will I be preparing before I
Mm,
call mortgage broker, but no, just reach out to them, but ready your details like what Sanjeev
yeah.
has mentioned.
Yes,
Awesome.
yes, at the like they so he already guys he already gave us all the requirements that you need to do, have it ready. If you are like I've got like lots of clients who are actually ready 3 months before, and so they've already tidied up their bank accounts and everything, and then they go to people like Sanjeev, and it was like I'm telling you, it's so fast as long as you're ready.
Yeah. Awesome. Thank you so much, everyone, for joining us
Thank
again tonight.
you.
And those who miss out, you can catch up on our videos in
Replay.
YouTube. On YouTube. Right. So that's it, our episode 5. And we look forward to having you again next week. What are we going to have? And what will we be discussing next week? Do you have an idea just to give them a bit of a clue?
I think what we can have for me for next week, because we've already have that, I think it would be good to think about, because there is one question in here that our viewer Elena also asked, is that the areas, like if there are actually affordable areas and everything. I think we can really dive into it, Ate. Which suburb would be like what Charlie, my colleague, said earlier, which would be really, really who has a lot of potential in the future that you want to hold back. And I
Yeah.
think like
Good.
right, Ate?
Yeah.
Like, I think I was watching you while Charlie was talking and while Sanjeev was talking, and I think you've got so much light bulbs, light bulbs, light bulbs moment.
Just yeah, it just happens. When you're interested in a topic, it just flow through.
Yes.
Oh, good.
And
So we
I
look
think
forward
that's a really
to
good one.
seeing everyone next week. I can't wait.
I
There are
think
more.
it would be better at the like also we will guys we will think if we can invite a lawyer. Like now that
Sure.
we've found a mortgage broker, maybe
Yeah.
we'll see that, oh, okay, so when do we need the lawyer?
Yeah.
When does
Definitely.
labor come in?
And for anyone else, if you have questions, feel free to drop it in the comment section, and we will answer all your questions directly on our next episode, or call Marianne straight away for more information.
Yes. And And the day, guys, the day you
Yeah.
might want to buy a house on that day, or you want to sell your home with me.
Thank you. And have a
Thank
lovely night,
you.
everybody. Thank you so much, Marianne. See you
Thanks,
next
Ate. Have a
week.
good evening.